What is going on, everybody? Billy here from Storm Trades with another trade recap. Today we're going to run through my long trade setup I took on gold futures Wednesday, August 27th during the New York AM trading session. Let's get right into it. All right, on the chart right now, the last 5 daily candles. We're looking at the daily chart. I'm trying to establish a daily bias. On this particular day, establishing a daily bias was finally sort of easy, right? As we could clearly see price moving from internal range liquidity to some sort of external range liquidity. First things first, whenever I'm looking at the daily chart and I'm trying to establish a bias, I want to chart out or mark out the previous daily low, the previous daily high, and I like to run a fib from the previous daily range. Now, I want to look at what happened the previous day, right? So today is Wednesday. What happened on Tuesday? Well, Tuesday swept Monday's low, okay, into some very important internal range liquidity, right? This is a bullish daily fair value gap. And then we expanded higher and closed very strong above the Tuesday high, okay? Let me mark that out right here. Okay, so, well, actually, we had a swing high here that we closed through. We also closed above the Tuesday swing or Tuesday high. All right, so this is pretty simple for me. This is a bullish. I have bullish daily bias. Okay, nothing else to it for me. Internal to external, right? So I don't have it marked off here, but way up here we have a swing high. I don't expect us to get there, right? I'm just trying to anticipate the daily candle, right? So there's nothing else to the daily bias. Okay, if I can clearly see which direction we're going and it makes sense logically, then I am running with bullish bias. Doesn't mean that price has to be bullish. In fact, as you'll see when we go into the hourly time frame, initially I was bearish on the hourly time frame, right? Because on the hourly time frame, I am looking for the most recent change in a state of delivery to help me understand where price is likely headed. That said, I always want to try and understand where my invalidation would be to that idea. So therefore, that in and of itself is sort of telling me when I would potentially get involved with a bullish trade. Okay, so first things first, I'm going to try and mark off some sort of liquidity. If we swept some liquidity, yeah, we did right there, right? That's a swing high. We swept that, right? The series of up close candles that took that liquidity, right? That's actually when we took the previous daily high. So where is the change in state of delivery? It's right here, right? So once we closed below the series of up close candles with some fair value gaps, right? These are small fair value gaps, right there. That is a confirmation to me that we have actually changed the state of delivery. So the next thing I'm going to do is try and take a look if we've swept any liquidity. We have right here. Okay, you can barely see it, but we did sweep some liquidity, right? That's an hourly swing high, right? So all of this is setting up nicely for a dump lower, right? We took some liquidity, a very how do I say this? A very good liquidity pool, right? Is the previous daily high, and after that we had a change in state of delivery confirmed, right? A swing right here. Now I want to ask the question: are we currently inside of or delivering from some sort of internal or external range liquidity, where we just saw that we swept the swing high here? But this was the first tell here. As I show you, we had a bearish fair value gap here, okay? And this is the 9 o'clock candle. It's the 9 o'clock candle close that swept this liquidity. The 8 o'clock candle actually closed above this, okay? So technically, this is an inversion fair value gap. Now, an inversion in this particular case is a bullish signature in price. So already a little bit skeptical here, right? I would have loved to see this fair value gap get just kind of swept into and now expected to close lower. So, this is what I would have liked to have seen, okay? But instead, we didn't get that, right? We had a close above. So this is the first crack in my kind of story, in my narrative, right? So I have that, and so I have an invalidation level. And that invalidation level is this series of down close candles. This is my if-then statement. If we close above this, here, let me take this off. If we close above this change in state of delivery, right, which I have is I have it dotted, right? This is my invalidation change in state delivery. If we close above that on an hourly candle, I would now, and we've already inverted this fair value gap, I would expect price to go higher. Okay, and that would be in line with my daily bias. I don't need to be in line with my daily bias. I just need to understand where price is likely to go next. I didn't like that we close above this fair value gap, inverting it. So this is my what if scenario right here, right? So if we get an hourly close above the change in state delivery, I would expect a move higher. So let's go down to the M5 time frame. Oh, excuse me. Let's go ahead and just move forward 1 hour. And would you take a look at that? Right. And there was no setups whatsoever to the bearish side. Well, at the close of this 10 o'clock candle, right? Very strong candle close. We have now created a change in the state of delivery to the bullish side, right? So I'm going to take this off. Right. This is no longer relevant to me. Let's take this away. Go on. All right. And take a look at this, right? We have a sweep. Okay. And we have a strong close above the series of down close candles. So as we're watching price, I always want to take a look at the most recent price delivery. So our price action rather. Okay. It doesn't really matter. I'm going to change this to a regular change in state delivery. Now I'm looking for higher prices. Okay. So I'm going to move down to the M5 time frame and just take a look at what we have here. Right. So I'm going to take all this away and let's take a look, right? So we want to so we have some liquidity up here. Yeah. Well, let's take a look at the 1/3 ADR levels. Okay. Are they telling us any kind of a story? Well, we didn't sweep any to the sell side. Okay. But as we start to look at price potentially going higher, do we have a 1/3 ADR that's close to some liquidity? We do. Look at the Asia high right there, basically stacked right on top of the 1/3 ADR. So now I'm getting interested, and I know that we have more room to go, right? Had we already cleared the 1/3 ADR, I may not have been interested in this, right? Because it looks like we've already made the reversal. So first things first, if we cleared any sort of liquidity, what we did right here, we had some relatively equal lows. This right here is our change in state of delivery, right there. Right, the series of down close candles that took that liquidity. Right, and also notice right here we have the series of up close candles prior to the move down that took liquidity. Once we go through this, right, this is a breaker block. Now, do we have a fair value gap that lines up with that? Well, we do actually. So I'm going to mark this off right here. Okay. So right now, this is a unicorn. I still didn't get involved in this trade. Okay. I had set a limit here on the unicorn, but didn't get tagged. So I'm going to show you how I got involved with a continuation, which I've been finding that continuations have been working for me, especially when I have a 1/3 ADR lined up with some liquidity. I've really been getting a lot of success with that. Okay. So we move price forward here. So fib from the swing low to the swing high here and try and line up some liquidity. And wouldn't you know, right around the -2 to -2.5. Okay. I'm going to be taking a look up here, right, as a target. And I would expect, okay, this is sort of as you're watching price and you're understanding what typically happens at various standard deviation levels, right? At the -1 to -1.5, that's the low-hanging fruit, like the first target typically. And what we'll see there is either a retracement or some consolidation. Okay, so I'll be watching for that. And if we get that, that's when I'm trying to get involved with some sort of a trade higher on a continuation. This would have been the reversal trade. Okay, I didn't get involved in this. And I'm just going to watch price now go higher. Now I'm going to take note here. Okay, we have a fair value gap here. This is a very low. This is a fair value gap. Okay, and also have a very small volume imbalance right here. Okay, so as I'm watching price, I've noticed that price came up into the -1 to -1.5 standard deviation. As I mentioned, we typically will see some sort of a consolidation or a retracement back down into some internal range liquidity or external. So I'm watching price. I'm starting to get excited about a potential continuation trade up into the 1/3 ADR, up into the -2, -2.5, up into the Asia high, okay? Which I'm going to mark off right here, okay? So this is my Asia high target. It's lined up with the 1/3 ADR. Been watching my videos, you know that I love targeting and forming reversals off the 1/3 ADR, especially if they line up with some liquidity. So I'm going to watch price, see what happens once we engage with some internal range liquidity. So we have a sweep right there, okay? And a move away. And I could have gotten involved with the trade once we hit that, but I wanted to see if we got a retest. And we did right here. Okay, I'm going to mark this off as a series of down close candles. Okay, and as soon as we get a close above that, I'll get involved, which was right here, with a long targeting the 1/3 ADR, happened to be 2R, and it was a little less than 2R, so I had the stop loss right below the fair value gap here. So 185. Okay, it doesn't matter. The good size trade. And I'm going to put in a buy here. Okay, there's a buy, stop loss right down there. Take profit at the 1/3 ADR. And let's go ahead and watch price. And boom. If you guys got anything else out of this at all, I really appreciate everybody who watches these videos. I get a ton. I'm getting better and better at trading. Okay, because I do this, I highly suggest everyone to journal, and if you can, make videos for yourself. You don't have to post them on YouTube. Kind of silly. I feel silly doing that, but it's been helping me a ton, and my trading has been drastically improving because of just me doing these videos and trying to understand, right? So there would have been a time where I would have thrown away this trade because I missed the reversal, and now I don't care. Now I sort of am understanding where I'd like to get involved with continuations. All right, if you guys got any questions, shoot me a note. Like, subscribe, smash the thumbs up button, whatever. You guys have a great day.